All right, if I were to tell you that NASDAQ would jump today, I think it's 8th consecutive jump, and it would be at a record when it seemed like Washington was imploding, you'd say, Neil, what are you saying? Well, this guy must have seen it coming. He was smiling then, ringing the bell at the NASDAQ, the Ameritrade's president and CEO, Tim Hockey. Now, of course, that was a record-setting advance, no doubt, because of your presence there. But what is going on? I always wonder whether Wall Street is disconnected from reality or is quite happy with what's going on.
Well, it depends on if you want to talk about our particular results. You could say that one of the things we like to think about ourselves is we bring Wall Street to Main Street, given that we're the e-broker class. And we've had a great quarter, as you said. It really hopefully contributed to that record high.
And you represent the retail interest that's grown in the market.
Absolutely.
Right?
And it was a fantastic quarter. So to give you some stats, we literally year to date have grown more accounts than we did all of last year. And we've got about 2.5 months left to go.
What do you think the reason was for that?
Well, it's we were just talking about it in the break. The VIX is an interesting phenomenon in the sense that
it's a sentiment, a gauge of fear, if you will, right, or lack thereof.
But it has trading. Our trades were up 10% year over year, and yet our VIX was down at 10, and then this quarter last year was actually at 15. So that wouldn't drive additional trading behavior on balance. So we've got more new accounts, literally a third more accounts this year than last year. And that's contributing to a more broad-based retail participation in the market.
But is it like the crazy go-go early 2000 type participation?
No.
No, cab drivers and everyone else was day trading and all that?
It doesn't feel like that. It feels much more sedate than that. The average trades per retail client is up slightly year over year, but there is broader participation in the market. And as you say, it's been an inexorable trend up in the markets that tend to shake off any negative news or fear.
But, you know, you and I were just discussing, too. Like, going in this morning after the healthcare thing imploded last night, I fully expect to see the futures down, maybe a lot, on the markets tanking, potentially a lot. They were rocky, but, you know, barely any change in the Dow 54. The NASDAQ has set a record. What the heck is going on? What's driving
I think you can see that same trend happening with many other pieces of news, whether it be here in this country or whether it be global news. I mean, Brexit was shaken off a year ago within a day or so. The election.
But this has been almost uninterrupted since the election, since the new year. So whatever the mainstream media is saying about Trump and his agenda and whether it's in danger, the markets seem to be saying, hey, well, we're fine here.
Yeah, and partly it's a global trend, right? You've seen some good numbers globally that has actually had central banks saying we're starting to see the GDP growth in these countries return. So it's talking about raising interest rates. In the United States, you're seeing that same consumer and CEO confidence going up, saying it's almost independent of the actual agenda itself, whether their companies themselves will be successful. And
sometimes our markets have run up so far so fast that a lot of people are saying, you know, you mentioned the globe. I mean, a lot of people are saying, well, maybe Europe's beckoning right now. How do you play it? How do your customers play it?
Well, they like to participate where they see opportunities, whether it be individuals or sectors or entire markets. But I think the American marketplace is still quite attractive to the average retail client.
Does it seem rich to you by any conventional measures?
There's many indicators that would say it is quite rich at this point. And frankly, that could be one of the reasons why you have more retail investors getting in, because they have seen quite a protracted period of day after day gains. But by other measures, there's still opportunity to go. And for the savvy trader and investor, there's always opportunities to find.
But when you look at what's been happening in tech and with Amazon and with Facebook and some of these others that you almost have to have in your portfolio to mimic the numbers that we've been saying, that it's dependent on a few. Is it dependent on a few or not?
Well, there are certainly the traditional FANGs, the Facebooks, the Amazons. Last quarter, the NVIDIA was a huge trade for our clients. So our retail consumers and clients, they tend to trade what they know. They know the brands. They know they like the brands. Snap was a huge driver of our activity. I think it was.
Do they get too giddy, or you're not there to judge, right? I mean, does it feel frothy to you?
It doesn't feel frothy to me. No, it doesn't. It actually just.
But what if we, let's say, don't get the tax cuts this year? They materialize maybe next year, if at all.
Yeah, I don't think that matters to the retail investor as much. It's certainly, if you were, we were talking during the break, that if you were to ask me, does it matter to TD Ameritrade if we were to get the tax break? Certainly it would be.
Well, it goes right to your bottom line.
Exactly. We have a relatively high tax rate, so that would be something that would be nice, but we don't count on it, not from an operating point of view, and I don't think our investors at this stage...
So you didn't do any strategy sessions. Guys, we could go all the way down to 15% here.
No.
Right.
We spend our time figuring out how can we do a better job serving our clients and then grow organically that way.
But a lot of people follow the herd, both on, on the upside and the downside, and so there's been this thought that this market has run a long time without a correction, all that. Does that part bug you, or there are other people just easily are, when you look at everything, it's not crazy?
Well, from our point of view as a broker-dealer in this space, we obviously make money when it goes up and goes down as long as people are trading. And as we were discussing earlier, when the VIX is low, you would assume that it would be quite calm and orderly. But in fact, we've seen, like I said, a very broad-based re-engagement with the market from a retail client, but not individually at very frothy levels. We haven't seen their average trade volumes double, for example, year over year. They're just
what would worry you? I mean, when you look at everything, because I remember, I'm so old, I do remember the 87 experience. I remember the 89 crash out. I remember these periods, whether it was pegged later on to Latin American debt or the ruble or you name your thing. These things materialize after the fact. I don't know what the next Black Swan event will be.
Right.
What keeps you up at night?
Well, I think what has us all scratching our heads is what is the underlying reason for this lack of volatility? I mean, you can argue that we are in very dangerous times, right? Whether we talk about North Korea and what's happening globally, or when it comes to this administration's agenda. And yet the market...
But this is a very market-friendly administration, right?
Generally, but whether the agenda...
But would we have these returns if Hillary Clinton had been elected?
That's a question. No, I'm not very an answer on the screen. Who knows? Hypotheticals aside, generally, the market is shaking everything off, everything that would seem to be disruptive in a very quick fashion. So you asked me what I'd be worried about. You said it yourself. It's those unknown unknowns that come at you from left field. There will be something that you think at some point will shake the markets, and people will go, well, of course you couldn't have VIX at multi-decade lows. Usually there is a reversion to a mean over some period of time.
And by the way, you mentioned that VIX and the volatility matter. Some people look at it, if it's very low, that's a counter indicator.
True, but I think if you've had literally an average of 20 over the course of 2 decades or whatever it is, and here we are, have been running at multi-decade lows, then you would say, just simple math would say there's probably going to be some reversion.
But you know what worried me too in the last big run-up? All people buying on margin, with borrowed money, they're off their accounts and all that. But what is it like with you?
Margin has ticked up slightly of our client base, but it was at a very low level for quite some period of time. I'll tell you what just did happen in the last quarter is we now see retail cash as a percentage of a client's portfolio drop almost to an all-time low. That's 2 things. That is, they're actually net buyers in the quarter. So they're taking their cash and deploying back into the marketplace.
In other words, they're not just sitting on a bunch of cash.
Exactly. So we're now at sort of 12. I think we hit 12% at the end of the quarter. Wow. And normally the range is, frankly, the average is around 15, and it gets as high as 20%. So 12 is very low. And so that's partly a numerator issue, how much cash they actually have per account, and partly a denominator issue being how high is the actual asset.
Is it default with your investors to buy something on margin, or is it set up that way?
No, not by no, by far.
That's their choice.
Their choice, and you would not see what you were talking about in terms of crisis.
Because you buy on margin so cheap anyway. One way or the other.
It certainly is still cheap.
This low-rate environment is changing, right?
Right. But I think there's lots of protections in the marketplace to make sure that isn't a trigger towards any sort of market meltdown we might get in the future.
Do you think we will have another one?
Another
meltdown? Another 2008?
Everybody's definition. I think we just have to look back at those 100-year charts and say there are ups and downs in the marketplace. But the one
that was a pretty memorable one.
Certainly was, but so was 1929, and so was 1987, and so was
right.
all of these things. So
what if we don't? I know it's hypothetical, and you're very good at shooing these away. We don't get the tax cuts at all.
I don't think that investors or CEOs running their companies are actually banking on them. I think they're planning on saying, I think it just feels that the economy is finally recovering, and you could have predicted that this was going to be a very long recovery after the last recession. Whenever you have these types of recessions or near depressions driven by financial crises, the deleveraging in an economy takes almost a decade, and that's pretty much where we're at. So this will be the end of that time frame, and hopefully we're still going to have a bull market for a while. Knock on whatever. All right, Tim Huckett, he is the TD Ameritrade CEO. Of course, they've been leading this charge, so are their investors.